did have a better week because I increased some of my long positions, mostly in gold, which I'll get to, and then some of my option positions, short call positions, didn't kind of perform fairly good. So overall, I had a reasonably good week, which has been about the first in about a month or so. Getting to gold, I have mentioned, again, this is the money printing part of it. I'll bring up one of my favorite charts there. Is the Fed balance sheet. I don't know if that can be seen, but we've gone from just over 4 trillion, about 4.1, and we've gone vertically up to about $6.5 trillion. So we're, the Fed balance sheet over literally a month has gone up over $2 trillion. So I started looking a little bit more at gold. Gold is, of course, kind of a substitute for the US dollar. It's been a separate asset class from fiat money, and bring up the gold chart. So, like I think I mentioned last week, so gold here is approaching 1800, and I do expect it to go through that. Maybe the next week or two. I know the Fed's going to, I got no proof of this, but they do try to manipulate it from, heard enough rumors to keep it down because they don't want something that's going to compete with the US dollar, or if people see gold going to, increasing $1,000 over a short period of time, people are going to really start to worry what their currency is worth. So that, I think, and if we go to a daily chart, I put this pitchfork in here, relatively short term, but we did get as high as 1760. If I bring this out down a little bit, pick up the 1800 line, so we could be looking at, by the end of, really another week or two, we could possibly break through the $1,800 an ounce. So that gets me into Centura Gold, which I bought, mentioned a couple videos ago, and it's been performing quite well. And one reason my cash levels were staying about 90, now they're down to about 88% cash, so I'm still extremely conservative. But I did have been buying, like I say, I always buy, if I want 1,000 shares, I always buy 200 or 300, wait a month, buy more. So I've been doing this. I don't even like the company that much, but I've explained why in the past on that. But it is leveraged kind of gold play, and my average price was down about 9.25. I put my sell line up to 950 now, so I can at least make some money if it does drop. And we're up to 1250. So I've made 25 some odd % on this in just the last month. And I figure this stock, if we make some aggressive assumptions, gold being over $2,000 an ounce, getting their mines back to full capacity, then the stock could run up to like the $30, $40 area. But they're big ifs, and I'll explain why. So they put out their quarterly results this Friday, 8:30 a.m. before the morning. And their last quarterly results was the end of the year. They lost 32 cents on the year, but their break even, as I talked about, this huge leverage. The break even is about $1,000 an ounce. So if you go from 1,100 where they're making a profit to 1,200, then they almost double their profits. So they can really leverage their earnings as gold prices go up. But the problem is with the COVID-19, I've been trying to see somewhere, like they have 3 big mines, what their production has been. And if their production, I know it has been reduced because worker safety, I think they're still operating at some level, but I don't know what that is, and that could come out as a bit of a shock on Friday morning. It could even be negative if they haven't been covering their costs because of the workers, reduced production. So I'm thinking I might, because I've made now 25–30% on this, and I'll see how it runs next week. Other investors might be thinking like me to sell it out on Thursday with the risk that the earnings are really good, then I miss a big bounce, Friday morning or something. But typically gold stocks aren't followed quite as closely as like Google or something like that, where they, if they beat the market, they pop up, a couple percent or something. So I'd rather lock in my profits and then see when the earnings come out Friday morning. If they look okay, if the share price responds okay, then I can buy back in again, and hopefully if they can get, and then look at their forward statements, if they can get their mine production back to where it was, then we could maybe see it slowly, run up to 15, 20, and then it really just depends on the gold price itself. And gold is responding exactly like it did in 2009 when they hang on a minute, see if I can. So there's the so we can see here this orange kind of line is gold futures. The bluish line is Centerra. This is 2009, and the stock actually went from around $2 up to 22. So it was a 1,000% increase over about 2.5 years. That won't happen this time because we would need gold to almost triple. And I don't think we'll see gold at 5,000 or 6,000, but a double is definitely in the works. And we can see that the gold started to bottomed out around 2017, and then we know around 2018 they started printing money again with their quantitative easing, and that's only been more aggressive. And we can see we've had now a run in from around the middle of 2018, gold was at 1,200, and now we're, like I say, almost up at 1,800. So that's been a very strong rally, and if we're actually printing more money this time, so there's a potential that gold does, I don't like making huge forecasts, but we could see maybe gold up at 3,000 or 4,000, and then Centerra and other gold plays would most likely triple or quadruple, but just have to wait and see on that one. So other than that, I didn't really make too many other changes. I still think we're having another wave down in the markets. I haven't changed that perspective. And even people like Warren Buffett are still sitting on about $125 billion worth of cash. And you look at some other successful hedge fund managers, they're still a little bit reluctant to get right back into the market. So, let's see what else I have for this week. So that's about it for this week. I'll put out something for next week, and thanks for tuning in. Bye.